Hey everybody, with the market volatility, many of you have been a little bit concerned about what's going on. So here's what we thought we would do. Send you out a video and explain exactly what's happening, why we are experiencing this market volatility, and basically what our viewpoint is of what you should or should not be doing. So let's talk about it a little bit. We've seen some interest rate hikes recently. We've also seen some renewed concern with China and China's trade policy. But I gotta tell you, this kind of stuff happens all the time. Only the headlines are a little bit different. We're always going to see market volatility. We don't believe that the market is going to come tanking down, and we are now at the start of the next 2008. So let's take a look at some of the things that we've highlighted here. First of all, the economy. The economy looks to be in very, very good shape. With unemployment, we're breaking records. We're at a 50-plus year low. Consumer spending is growing. Consumer and business confidence is way, way up. The job market is real strong, and still, by historical standards, interest rates are still relatively low. So that's really important, and that should not be discounted. Now, the next thing we want to discuss is stocks tend to do very well after the midterm elections. The midterm elections, of course, are right around the corner. And here's some stats for you. The average 12-month gain after midterm election year lows is over 30%. And since 1946, the S&P 500 has never been down 12 months following midterm elections. That means we may just have entered the best 9-month period for stocks in the entire 4-year presidential cycle. So that's pretty darn important. All right, next, let's talk about pullbacks, because yes, what we've been experiencing is a pullback. It's not a correction. It's not a market crash. It's a pullback. So even though stocks tends to average a gain each year on average, we also have pullbacks. Do you know since 1900 there's been a market correction on average every single year? Now, I pulled this off of my supply room. We have a bunch of booklets that are yours simply for the asking. There's no cost for these. If you'd like to learn a little bit more about market volatility and what you should or should not do, give us a call. We'll send this out to you. This is Understanding Market Corrections. This is a Holland Group piece for you. Give you an example what's in here. Do you know the difference between a pullback, a correction, or a bear market? And 5 things that you should be doing during a market correction. So again, if you like this piece, just simply let us know. All right, so let's talk a little bit about what we see next. Weakness. Weakness ahead of elections has been quite normal recently. In fact, ahead of the November 2016 presidential election, the S&P fell 9 consecutive days. Remember that? We introduced our new president, and the market kept going down, 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 down. But we all know what happened after that. The media quickly called this the Trump bump, and we've seen an awful lot of strength in the market since then. Over time, stocks tend to do well. Where are we? Right down here. Over time, stocks tend to do well as interest rates rise. That is very, very true, as long as the rates are rising because of better economic news. And we believe that is exactly what we are experiencing. Okay, so the last thing, one of the last things I want to talk to you about right down here is market timing, speculation or speculating, track record investing. These are just bad investment strategies. They're not sustainable. They don't work. We don't believe the past equals the future. We don't believe that you should be speculating. We don't believe you should be market timing, selling everything and going into cash. It doesn't work. You know, I've been studying this stuff for more than 30 years. So what we want you to remember is simply this. Your retirement, of course, 20 to 30 years of unemployment. I have right in my office here, right in this room, a crystal ball. Remember, nobody has a crystal ball that actually works. Turn off the noise. Stop listening to the media. If you have concerns about your investment portfolio, your allocation, call us and we'll sit down, we'll review it. Please always remember that the biggest mistakes happen when people make drastic changes, especially at the wrong time. We are a mouse click or a phone call away, so get in touch with us and we'll be happy to sit down with you. Thanks so much.